thank you very much for inviting us to present to this very important meeting, and we do hold this and truly appreciate this very much. On the call, I have my colleague Noel, who will also be doing a part of this presentation. But let me start off by thanking all of you and thanking particularly Madame Rhoda, who saw this through to the last minute. Now, in the presentation, we're going to look at the business case. What's the rationale for a continent-wide payment platform that's interoperable? We'll look at the design principles. We'll also discuss the governance structure, the status, and my colleague will go through the use cases, the practical use cases that business people like yourselves will see themselves and how they can use PAPSS to achieve their objectives. If we look at how we are doing payments today, if one is paying from Ghana to Gambia, the payment comes from a bank in Ghana and first hits a bank in North America as a correspondent bank, and then probably it also hits another bank. Probably it is another bank either in Europe or in North America still to be able to reach where it's going in Ghana. So that means that if we are transferring funds from Ghana to Gambia, we require at least one or two correspondent banks in between. Now, this becomes costly and also becomes sometimes delays the funds to arrive where they're going, where they're meant to. So this is what comes at the forefront. That said, we realize that cross-border transactions are very expensive and leading to unestimated loss of $5 billion. I hope you can hear me all. So, for instance, in 2017, the SWIFT estimates for the transactions have been around $18.8 billion, and the unestimated estimates to rise to $33 billion. Only 14.8 billion intra-African payments that are destined for countries in Africa are cleared by a non-African counterpart. So this means that 80% of the transactions meant for the African continent and originated from the African continent within, all cleared by a non-African entity. And this calls for us to be able to clear our own transactions and be able to settle them as well. That's a rationale for having a cross-border or a continent-wide payment platform or payment system. Now, the rationale for this is after the creation of the AfCFTA, the African Continental Free Trade Area and agreement being signed, it requires that an integrated continent-wide payment infrastructure is set up. Because the current payment systems are regional and a little fragmented and cannot support intra-African trade and AfCFTA as you wish it to move. And this has led to a version of trade. We've had discussions with several business people who say, and maybe you can also confirm yourselves, that people are doing trade with other continents because there's an ease of payment, an easy payment mechanism. Expensive but easy in terms of their connections there, the interoperability is there. So this has led to the diversion of trade to other continents because we don't have an interoperable continent-wide payment platform. And inevitably, cross-border transactions are very expensive. And there's also a heavy reliance on foreign currencies, which is a detriment to our own currencies and inhibit trade and economic development. And all this results into the impediment of trade, which is what has led us to be able to create one content-wide payment system. Now, before developing this payment system, we had to look at what's happening today and also examine exactly what kind of payment system does Africa need. One of the principles is instant payments and local currencies. Now, for a while, as we just saw above, that the whole corresponding system kind of takes long to pay, 3 to 5 days, but also it's done in a foreign currency. So we can't use our currencies and we can't pay instantly. And this inhibits trade development. Therefore, we have to find a payment system that can disintermediate correspondent banking. So therefore, the continent had to invest in a centralized financial market infrastructure to facilitate this kind of trade. And two, a very important fact in payment systems is that we need an entity that can guarantee settlement, where settlement finality is not an issue. And this had to be a very big principle in terms of designing a system. So we had to make sure that the system of design has got an institution behind the settlement finality, guaranteeing payment finality, liquidity risk, and credit risk. And also had to make sure that whichever institution that was starting up the system had to have a strong legal foundation, and the system had to be built on the solid and proven technology. There are institutions that are very critical in payment systems development, and these are central banks. So we need to make sure that the system is well grounded and supported by central banks all over Africa. And again, this system had to have a buy-in from the highest level and endorsement from the highest level at the African Union level. We also had to make sure that the way Africa is structured, with different languages, different central banks, different currencies, we had to have a system that can demonstrate credibility and success as a pilot in a region that represents what's happening elsewhere in Africa. And also we have to make sure that since there are different regions and different countries on board, that all their systems are updated to the extent that they can interoperate and be scalable to joining PAPSS. Now, how does the Pan-African Payment and Settlement System check these boxes? I may have forgotten to define what PAPSS is. PAPSS is an acronym for the Pan-African Payment and Settlement System. Let's look at the sound legal basis. Afreximbank is an implementing bank for this for the PAPSS, and it's based on its mandate as contained in the establishment agreements signed by 51 states in Africa. So this itself gave it a legal foundation to be able to develop the payment system. In the agreement, it stated that the bank will support payment arrangements to be able to increase intra-African trade. Can everyone hear me?
Yes, we can hear you.
Excellent. And again, in terms of having a successful pilot, a successful pilot has been completed in the West African Monetary Zone, where Ghana belongs, and in partnership with central banks. This is a region that's multilingual, both French and English. We have Ghana, we have Nigeria, we have Gambia, we have Sierra Leone, we have Guinea as well, and all these, and Gambia, and all these speak either French or English. And we have piloted it, tested it, and live transactions between central banks have occurred successfully. We also, in terms of settlement finality, we've got Afreximbank that has guaranteed payment finality. It has guaranteed payment finality in terms of setting aside a fund of $500 million. In case a central bank cannot settle, they can draw on this fund to be able to settle, so they don't compromise the system. And the system that we want a system that has no glitches in terms of payment finality, so that payments can flow and settlement can occur as required and at the time required. So this facility is available to one of the central banks, and also the bank has allowed through its board $3 billion once the operation is across the whole continent. The other important principle that PAPSS has ticked off is the instant payment in local currencies. Transactions are instant. We designed the system to be able to accept payment in 120 seconds. That's in 2 minutes. The pilot has proved that this can be done and has averaged 7 seconds. So this is proves the instant payment, and also these have been successfully done in local currencies between central banks. It also runs on a secure and proven technology, which today is the ISO 20022. Many banks may not be up to this technology, but what we do, the technology is scalable and able to integrate a bank that doesn't have this technology, even if we know that most banks are building to have this technology as well. The system has also received a strong support from central banks. We have, in our governance structure, we have central banks running the system, central banks governing the system. All central banks that have joined the system sit on what we call the PAPSS Governing Council, and hence come in to support in terms of setting the regulations, setting the guidelines for the operations. So this means that central banks are actually overseeing the system as it is required in their own laws and also in their own jurisdictions. Sorry, I just have to go back. The system is also flexible in terms of integration. It can integrate to a national payment system or to a regional payment system. And also in developing it, we had a wide collaboration with all regional payment systems and a couple of central banks as well. So that sets PAPSS to be truly what we want as a continental payment system that can serve the country, the continent, and be able to propel growth in intra-African trade. Now, what are the critical objectives of PAPSS? This is to increase intra-African trade, facilitate economic and regional integration, reduce costs of cross-border payments across Africa by disintermediating correspondent banking, and hence reduce duration and time variability of cross-border payments across Africa. It will also decrease the liquidity requirements for commercial banks, in terms of cross-border payments, because this is a multilateral net settlement system. And likewise, to decrease the liquidity requirements for central banks because of its multilateral net basis system. It also supporting disintermediating correspondent bank relationships for intra-African trade payment flows. Now, we may recall that about 5-6 years ago, many correspondent banks cut off relations with African banks because of many reasons. And this set these banks having to use the few banks that had those relationships, like in Mauritius or in Southern Africa, and somewhere around the Western Africa. So those that are not big enough to contain this kind of shock had to use others, and that became very costly, and also in terms of money and in terms of time as well. So we need to have these correspondent banking relationships kind of tamed and disintermediated so that payments can be instant and in local currencies as well. And this also perhaps will strengthen the central bank's oversight of cross-border payment systems because they'll be able to get all the information. The aim is also to see that the many informal trades that are happening across borders we can ease the way they pay and hence bring them into the formal system and be able to, and they themselves can be able to benefit from the financial sector. Now, what's a PAPSS ecosystem? I'll go through this globally. First, we have the core PAPSS system, which is what we have built at the core, which is number 1 in pink. This is an instant payment system. It has got Forex and management, limit management, can manage Forex, can manage clearing and settlements. It can manage dispute management, can do sanction screening, anti-money laundering, and all that kind of detection. It can do that. Now, on top of that, we are recruiting direct participants. Direct participants are informed central banks and banks that do participate in the local payment system. So these come in as direct participants. And above that, what's layered above that, we have the indirect participants. The PAPSS rails or the PAPSS infrastructure has been laid so that any payment service provider can come and seek a service, whether it's a settlement service or payment and settlement service together, and also be able to benefit and do cross-border transactions. So money transfer operators can come, mobile money operators can, card schemes, securities settlement systems, they all can come and use the PAPSS platform in any form that they may desire to be able to effect cross-border transactions. Now, above that, we have the products and innovations. So any of the users of PAPSS can innovate a product and be able to write in the PAPSS infrastructure to be able to carry on their cross-border business. I must emphasize here that PAPSS is not there to come and do national systems, national payments. National payments do exist, regional payments do exist, but we come in to interoperate all of them, to work with the national system to be able to interlink it to cross-border, or a regional payment system to be able to connect it to the other regions of Africa. So that said, what's the governance structure? The governance structure is very important here because the Pan-African payment and settlement system is a financial market infrastructure, first of all, and because of its size and magnitude, we have set in place and put in place a governance structure. The governance structure runs as follows. Above everything, we have the highest regulating organ of PAPSS is the PAPSS Governing Council. This is constituted by the governors of central banks, of all participating members. And this gives the direction in terms of regulations, in terms of guidelines on how they approve the bylaws, they approve the agreements we sign with banks and central banks, and approve how we move with the other payment service providers. Within that, we have the PAPSS Payment Systems Oversight Committee. This is constituted of the directors of payment systems within the central banks. And these are people with expert knowledge in terms of overseeing or supervising payment systems. And this committee has got the delegated powers of the PGC and is responsible for the oversight of PAPSS in general. Below that, we have the PAPSS Management Board, which is like a board of governors, which runs the technical and operational management of PAPSS and oversees the management, the PAPSS management team, which Mr. Michael Barr leads, and myself as a deputy, and also we have colleagues like Noel who are part of us. So this is how the governance structure is built within PAPSS. Now, where are we today? In terms of the WAMS region, we have signed up the 6 central banks. That is the logos are visible there. We have the Central Bank of Nigeria, Bank of Ghana, we have Bank of Sierra Leone, Central Bank of Liberia, we have the Central Bank of the Gambia, and Central Bank of Guinea Conakry. All these are live on the system and have already had live transactions. In terms of commercial banks, we have signed up 19 commercial banks across the 6 countries, and we have several banks in line as well. To date, we have about 24 banks in line and at different stages of integration of signing the agreement. We've signed up switchers as well. GIPS is at 95% of integration. NIB is about the same. eTransact, InterSwitch, Unify, UPS, and GAM switch have all signed. And also we have one switch in East Africa that's finalizing the agreement. That's the Rwanda switch from Rwanda. We've got also fintechs that have approached us. We signed an NDA with them, and with the PGC as our governance structure is structured. They have approved guidelines to be able to guide us on how we can bring in the fintechs. The fintechs create a very important line in terms of financial integration, because they deal with the common man on the street, common woman on the street. The SME can come through a fintech. So these fintechs, we look at them as very important, and now we have the guidelines to be able to bring them on board. In terms of regions, we we have very good, we have had discussion with BAYAC, that's in Central Africa, and that's supposed to come on board as well very quickly. We have had discussion with EAC. EAC is the East African Community. There's 6 central banks. We've had a discussion with them, and they're looking at joining PAPSS as well as a block. And COMESA Clearinghouse is also looking at joining us as through its regional payment and settlement system, which we want to link into and be able to serve the region or to connect the region to other regions in Africa. In terms of individual central banks, we have the Central Bank of Djibouti that has signed up. They've signed the Central Bank Settlement Agreement, and one other bank in the COMESA region has signed, and we'll make the announcement when the time is appropriate. So for now, after this, I can hand over to Noel to go through the use cases. And particularly, these are very important to you because that's where you will see yourselves doing transactions. But I thought that was very important to give the background, the rationale, and where we've come from and where we are in forming bringing to life, bring PAPSS to the live mode, and also to be able to serve the economies of Africa. So Noel, I hand this over to you. Do you want me to project for you, or you project for yourself? If you may allow, I will hand over to my colleague Noel now.
Okay. Thank you very much, John. I can actually project for myself. So good morning, good afternoon to everyone. I'm Noel Aja. I'm in charge of memberships and participant management for PAPSS. I will now share my screen and start the presentation on the use cases. So at PAPSS, we have different types of participants. We have commercial, we have direct and indirect participants. We have commercial banks that are qualified as direct participants due to the fact that they have a settlement account in the RTGS system, and to the fact that they can actually pre-fund the activity in PAPSS using that settlement system and the pre-funding account of PAPSS, which is opened in the RTGS system as well. So this is a case of 2 commercial banks, one located in Ghana and another one located in Nigeria. And let's assume that both commercial banks are participants in PAPSS. And we have now a reseller, which is located in Ghana, a reseller of flour, and a trader located in Nigeria. And let's say the reseller would like to purchase flour from that trader located in Nigeria. So in order to do so, the reseller will initiate that transaction through internet banking or any access channels provided by its commercial bank, which is the commercial bank located in Ghana. And upon receipt of that instruction from that reseller, the commercial bank will send a message with all payment details to PAPSS, and PAPSS will validate the payment message and send the payment instruction to the commercial bank on the other side, the commercial bank located in Nigeria. And once the commercial bank located in Nigeria will receive the instruction from PAPSS, that commercial bank will validate the trader's details and send a positive response to PAPSS. PAPSS will now change the status of the transaction to final, and the funds will be credited into the trader's account. And both the reseller and the trader will receive the notification of the outcome of the transaction. And all of that will need to happen within 120 seconds. Otherwise, the payment will be rejected. So I'm now taking you through the use case number 2, again for commercial banks. So we have two commercial banks, one located in the Gambia and the other one located in Nigeria. And let's assume that we have Brice. Brice is a Gambian citizen that would like to invest in the Nigerian stock exchange. So in order to do so, Brice has an account with the commercial bank located in the Gambia, and Brice will now initiate a transaction through internet banking or again any other access channels provided by that commercial bank. And upon receipt of the instruction coming from Brice, that commercial bank will send a message with all payment details to PAPSS. PAPSS will validate the payment message and send the payment instruction to the bank where the broker has an account opened. And then that bank will validate the broker's details and send a positive response to PAPSS. PAPSS will change the status of the transaction to final, and the funds will be credited into the broker's account. And both Brice and the broker will receive notification of the outcome of that transaction. And again, as I said earlier, all of that will need to happen within 120 seconds. But I also wanted to highlight the fact that during the pilot stage in the WAMZ region, we're actually able to complete cross-border payment in 7 seconds on average. And I'm now going to take you through some other use cases for what we call indirect participants. So the indirect participants are the entities that do not participate in the RTGS system of the central bank of their local jurisdiction, but for them to participate in PAPSS, they will need to open an account with one of our direct participants, one of the commercial banks that are participants in PAPSS for pre-funding purposes. So we have the case of Speedy Transfers. Speedy Transfers is a money transfer operator, and Matthew, Matthew is located in Ghana and would like to transfer some money to his brother Paul that lives in Sierra Leone, and Matthew would like to do so using Speedy Transfers. Speedy Transfer is an indirect participant in PAPSS. So in order to do so, Matthew will connect to Speedy Transfers and initiate that transaction through a web application or any other access channels provided by Speedy Transfers to Matthew. And then upon receipt of the instruction from Matthew, Speedy Transfer will send a message with all payment details to PAPSS for validation before that payment message can be sent to the commercial bank where Paul has an account opened. And then the commercial bank will validate Paul's details and send a positive response to PAPSS. Then PAPSS will change the status of the transaction to final, and the funds will be credited into Paul's account. And all of that will need to happen again within 120 seconds. And as you can see, we have the capability at PAPSS level to undertake all kind of validation of beneficiaries' details and all kind of validation, all kind of screening of payment before even the payment can actually land into the beneficiary's account. This is another use case. That is going to be the last one. Again, we are taking the example of an indirect participant, Worldwide Mobile, which is a mobile money operator, is an indirect participant in PAPSS. And then we have Mr. John, which is a Liberian citizen that lives in the Gambia and that would like to pay the electricity bills for his family that lives back home in Liberia, whilst Mr. John lives in the Gambia. So in order to do so, Mr. John would like to use the services of Worldwide Mobile. Mr. John will connect to Worldwide Mobile to pay the bills, and once Worldwide Mobile receive the instruction from Mr. John, Worldwide Mobile will send a message with all payment details to PAPSS. PAPSS will validate the payment message and send the payment instruction to the bank of the national electricity supplier. And once that bank will validate the national electricity supplier details, PAPSS will change the status of the transaction to final, and the funds will be credited into the national electricity supplier's account. And again, all of that will need to happen within 120 seconds. So this is the actual end of our presentation. We'll be happy to take any questions that you may have. Over to you, John.
Thank you very much, Noel. Dear colleagues, that was our presentation. We are now ready for any questions.